Welcome back. The market holding firm, especially the bank nifty with the run in ICICI and Axis Bank and the mid caps also doing well. So we'll now focus on one sector which has been doing well, textile. It's seen strong demand growth. The stocks have also seen a sharp up move this year. The government has also introduced a host of initiatives like the PLI of almost about 10,700 crores. Ganesh Kumar, CEO Lifestyle Business at Raymond, and Sanjay Gupta, CFO at Welspun Group, now joining us. Gentlemen, good morning. Sanjay, I want to begin with you. I was reading that in September, India's exports to US, for example, saw quite a bit of growth. Over the last one decade or so, as a country, we have lost out to Bangladesh, the position as number one. Do you think going forward, we can make up for that?
So, as far as export is concerned, the export from India to US is actually growing. So we have grown in last 1 year to 45% in towels and 57% in sheets, as compared to 42% and 47% respectively a year back. Welspun is one of the largest supplier of home textile in US globally, and 1 in 4 towels and 1 in 7 sheets being sold in US is made by Welspun. So because of the retailers' strategies of getting supplies from other countries, India is benefiting from that, and we are seeing that in the growth numbers that we are seeing in home textile export in India.
Okay, all right. Let's hop across to Mr. Ganesh. So how is business shaping up on ground? Have you seen a big recovery? If yes, could you put a couple of numbers, say compare this phase with the prior COVID period?
Yeah, so I think thank you for having me over. Business has been very, very positive over the last 2-3 months, and we see that continuing buoyancy in the market from a consumer point of view. 2-3 things. I think this was led by the festive season, then followed by the strong wedding season that we see to continue till probably April, May, June as we come into Maharashtra. So there's going to be a strong demand over there. Second is also, as life is opening up, as offices are coming up, there is a need to look at and bring freshness into the wardrobes. So we are seeing some of these driving the growth. Just to give a perspective, the secondary we track, and which is an indicator of how well the market is recovering, we are talking of about 7 to 9% growth across different markets in the secondary sales as compared to same period in 2019. I think that's one big side of it. And as Sanjay mentioned, we've also witnessed a strong demand from both US and Europe for the ready-made garment side of the business, which is again to do with 2-3 logical reasons, which is first is essentially during the pandemic, a lot of the retailers have reduced their inventories. So they have come up to rock bottom levels. Second was also now with some of the supply chain challenges, longer duration of transit times taken. So they want to build up inventories fast. So, and the third is, of course, there is a genuine demand from the consumer side to replenish the wardrobe, whether it is, in fact, we are seeing demand in suits, jackets, trousers, and dress shirts as a segment.
Okay, fair point. Sanjay, getting back to the point, if you could give us some numbers in terms of how our numbers have been compared to Bangladesh and some of the other countries, and how do you see that shaping up?
So as compared to in home textile, we are the leader. India is exporting 45% of the requirement of US of towels and 57% in sheets. Out of this, 25% of the towels and 17% of the sheets are being exported by Welspun. Bangladesh has not been there in this. Bangladesh has been more mainly in Pakistan, and Bangladesh has been mainly in the Eurozone, where India has a disadvantage because of GSP plus status enjoyed by them. However, in US, the export continues to be very buoyant, and growth has been quite good. We recorded our highest revenue, quarterly revenue of 2,500 crore and highest yearly revenue of 4,728 crore growing over 47% over last year. As well as if you see the pre-pandemic period of first half of 1920, we have grown by 33%. So all this augurs very well, and the demand has been very buoyant for us.
Okay, all right. Good speaking to you all, gentlemen. Thanks so much for stopping by and giving us your inputs. Wishing you all the best in terms of the next year, that's 2022. Well, another management is standing by, so let's get straight to that. We have Mr. Sanjeev Singhal, the Director of Finance at Mazgon Dock Shipbuilders, who joins us to discuss the outlook in terms of business from here on. Well, Mr. Singhal, morning. Thanks so much for joining in. Could you give us an update in terms of your order book? And also, you had mentioned in the past that you all were looking at bidding for a couple of orders. I think we spoke just a month or so ago. Has there been any change? Any new orders backed?
Yeah, as far as the order book is concerned, we are comfortably placed at around 47,700 crores with respect to existing projects. Of course, with respect to certain new projects which we have been eyeing, and in many of them we have already participated. However, the results are still awaited as far as a order which appears to be, the price bid would be opened probably in the month of January, is 11 number next generation OPVs, which is pegged at approximately 10,000 crores. And there are a number of projects which are still at RFI stage, which include 4 number LPDs for the Indian Navy, 8 number next generation fast patrol vessels for Indian
Mr.
Coast
Singhal?
Guard. Yeah.
Mr. Singhal, you know, the last time you mentioned there was a Navy and there was a Coast Guard order of around 12,000 crores order that you were, bidding for. So the results hasn't yet come about, right? You're saying that that's still awaited.
Yeah.
And currently the order book is 47,000 crores.
Yeah.
Okay.
Mr. Singhal, good morning. My colleague Agam tells me that your EBITDA margins have been below 6% for last couple of financial years. Are you expecting any improvement going forward?
So primarily, my order book consists of the nomination-based orders, so there won't be a significant change in terms of EBITDA margin. Although with the volumes going up in absolute numbers, definitely numbers would be rising.
Right. So that order, the tender which you said will be opening in January, what is, I mean, where are you in the, how is that, how likely are you to get it? You said 9 to 10,000 crores, is it?
Yeah, it is approximately 9,000 crores, and we feel we are a strong contender. A very good pricing has been submitted. So we are also hoping for the best.
And beyond that, what is, what else is coming up in terms of tenders? Just give us an idea.
Mazgon Dock Shipbuilders has participated in a number of tenders. This is what I was explaining, 4 number LPDs for the Indian Navy. Another 8 number fast new next generation fast patrol vessels for ICG, approximately 800 crores. 7 number fast attack crafts for Indian Navy, then 12 number air cushion vessels, approximately 500 crores. Then 6 number next generation missile vessel for Indian Navy, 2 number multi-purpose vessels for Indian Navy, approximately 2,000 crores, and a couple of export tenders also, which are in pretty advanced stage. So we are also waiting for the outcomes.
You know, Mr. Singhal, I sense your passion for the business. You're using a couple of technical terms, but from a stock market perspective, we only understand revenues, margins, order book, etc. And the last time we chatted, I think you were hinting that in FY22, you should do revenues of roughly around 5,000 crores. And for FY23, you're looking at a 10 to 15% growth. Do you stay by that, or do you revise that upwards?
We stay by that. As far as 22 is concerned, we are targeting around 5,000 crores and 10 to 15% growth in 22-23.
Okay, all right. And in terms of exports, you were saying that there is big potential. You were looking at a couple of orders in Argentina, if I'm not mistaken. There was around, I think, an 1,800 crore opportunity. Has anything come out of that, or are you still waiting for some kind of order inflow to come in from the export market? And that will not be nomination based, right? So the margins could be better there?
Difficult to say for the margins right now. It would depend how the situation shapes up. Right now, the primary focus is to establish a foothold in the export market as well as in the market for repairs and refits. In the recent past, we have bagged a couple of small value orders in the repair and refits, where the focus has been to establish that yes, Mazagon Dock Shipbuilders is also into this field in the commercial repairs, refits. And the heartening fact is that more and more inquiries are flowing in. So we expect that in future, this segment is also going to be more lucrative for MDL.
All right, Mr. Singhal, we'll leave it there today. Thanks a lot for joining us. That's Mazagon Dock. But you know what we need to